Alright, so I'm trying a new trading strategy. It's using the 6 day moving average, exponential moving average, the 14-day exponential moving average, and the 26-day exponential moving average. The ideal is to use the 26-day moving average as your pretty much like your ground level, your ceiling level, or your floor level, just depending on which direction it's trading in. If it's going down, then of course it's going to be your ceiling level. If it's going up, then of course it's going to be your floor level. Now the only thing is to find a time frame that actually works better with this trading strategy. The 2 minute looks like it works good. If you see here, notice here the 6 day holding it here. Still staying below the 26, and I mean moving well in between these averages here. There's your breakout between both moving averages. Let's see how that let's see how that compares. Sorry about that. Compares with the other breaking through the two moving averages. Here was not a close above. Here we closed above. Confirmation, we got I like to call this a teardrop. Look at that long, it's almost like a cross. Well, it is a cross, but you see how that works out, and it falls down. Let's compare that with the next one that we had, and we actually got a bullish cross this time. On the last one we had a red cross. So in this one we have a bullish cross, and we retested the 6 day, and we have a cross in between the 6 day and the 14 day. So this could be a good advantage to go long. And you have let's say you went long here, so you're at 171.25. Your top 171.42. So I mean about a 20 cent gain, but just depending on how many contracts you've bought, you may have made some money. So I think this strategy would help if you're buying a number of contracts. It may work if you're buying a small amount of contracts, maybe 2, 3, or 5, but it just has to move more. It just has to move enough for you to make money, and also just depending on where you actually place your strike. So at this level here, say you bought the 171.100 strike, that would actually be better than buying the 171.50 strike, because of course we are in a bearish downtrend. So expecting a reversal, I mean it could be possible. I mean, you just never know. These markets are unpredictable. But I mean, you gotta use your indicators as best as you can to try to help you capitalize on most of those gains. But here you go. So we got a break, and of course, if we're still thinking bearish, then we're waiting on, when you see this 6 day crossing. Here's your floor now. It's testing, going below, coming back up, here, there, and broke. you could actually place your trade on this confirmed break here and hold. You would be 128. If you held, this stayed below, this stayed, this dropped. Now, here's where your dilemma is. Most of the times you take gains as much as you can. Once you have a gain, if you do not have another level or a target level, and let's say you do place your target level and your target level doesn't hit, that's why I'm real strict on taking gains as soon as I have them. Don't be greedy, because you never know what can happen in the next 5 or 10 minutes. So at this point, once you got this, it didn't get above, so you're safe from there. You got here and it fell. This could be your. If this right here would have stayed down, then okay, of course, stick with it. But it did not go down. It got as far as here, and it probably moved back up. I'm not sure how long, because we're looking at the 2-minute chart. Take your gains from here. So you're at 171.10. You entered in at maybe about 171.34. So you're looking at about maybe about 20 or 30 cent gain, almost about a 20-30 cent gain. And of course, depending on how much you've invested, you might have made some gains, and you may come out even. But I think that this strategy works if you buy a number of contracts. So let's see how the trade coincides. Now remember, again, I know I said you can use this as like your sell, but again, I also said that this is your floor / ceiling. So you could chance that once it comes to this point, it does not break above. And let's see how the trade works out. So let's say you got in here. Remember, I'd like to take gains as soon as I have them. So more than likely, just depending on how many contracts I would have bought, I probably would have sold out here. But if I'm still really bearish, and I say, okay, as long as it doesn't break above here, I'll keep the trade. And notice where it goes. Notice in this area, you got a nice break. And this is what I mean by you never know what can happen a couple of minutes later. This is why I take profits as soon as I can, because sometimes markets do not go straight down. Some markets do not go straight up. They fluctuate. You want to take advantage of the fluctuation. So there you have it. So that's using the 2-minute chart. And we see how that works there. That's the 1-minute chart. That's why that was looking. I was wondering why that was looking strange. Okay, so that's the 1 minute, and let's see how it looks on the 1 minute. All right, now granted, we can use the same strategy. But it doesn't seem like it holds as well. It does in some areas, but again, this is something that we'll have to try out as the time passes. And of course, if something works more than 51% of the times, you're winning. So all it has to do, you need that more than 51% of the time for you to make money. If it works only 50% of the time, you're pretty much back to where you started. Let's try the 5-minute chart. So on the 5-minute chart, and of course, if you're new to my trading, I like the 200-day, and I like the 100-day. I like the 50-day, and I like the 20-day. Those really help out too during the trading. Anything below the 200-day to me is bearish. So short, short, short. Anything above the 200-day is bullish. Buy, buy, buy. So we're at the 5-minute chart, and we're looking to see how this 26-day moving average helps out. So as we go through the day, on a 5-minute chart, it actually stays below a long time. Actually stays below the 14-day, touching briefly, but staying below. Touching briefly, hit the 26-day moving average, and fell below. So actually, as you see here on the 5-minute chart, the 6/14/26 day moving average actually works out really nicely. Works out actually really nicely. I like that. So that's in SPY. Let's see how it works out in Facebook. Alright, so we're on Facebook, and of course Facebook is the opposite of what we were looking at. We were looking at this being a ceiling, and now we're looking at, with Facebook, this being a floor. And here's my famous 200-day moving average, well above the 200-day moving average. Very bullish. Okay, so let's see how this works out. There's the 6-day, it's above. Floor, holds, falls, but gives back above. Now, what I've learned is whenever the 6 and the 14-day moves close together, it's range bound. Not a really good time to trade. You see that. You notice that. You want the big differentials. You want the big fan, I should say. The smaller the fan, the trade can go either way. But as you see here, Facebook actually remained bullish. And if I draw some levels in here, there's a level there, and we're basing that off of the first 5-minute trade. We're using that as another floor. We break here, but we quickly, 5, 10, 15, 20, 25 minutes later, we come back, and we actually did not go below this candle here. Going back above and back above the 26-day moving average. So again, a retest of this level, retest here, a retest here, a retest, retest, retest in this area here. Could be a nice gamble because of the bullish return back over this level here. The Facebook stock has held this level over 5, 10, 15, 20, 25 minutes, and now is trying to break out. At this point here, I don't like to trade when it's bunched up like this, but this could be setting up for a nice pop. And what do we get? A pop. A nice strong pop. That's $1 from here to there. I mean $1 from here, but even more from this level. So that's the 6 day. See, I got 6 exponential, 14, 26, and 20. That's my moving averages. That's what I'm using. Now, how does my other moving averages work in between there too? So what I'm going to do is I'm going to pause the video 1 second. Let me set something up. Okay, so how does that work with my other moving averages? Okay, so how does that work with my other moving averages? My moving average that I like to use on the 1 minute chart is the 20 day, 50 day, 100 day, 200 day. Below the 200 day, very bearish. Above, again, bullish. I use these indicators a lot. The 20 day, 50 day, 100 day, and 200 day. My 200 day and the 100 day acting like the 26 day floor / ceiling. I use that. I use these two a lot in my daily trades. And you see here how the 20 day reacted on a minute chart, broke above. Now we have the 100 day. Didn't get above, stayed below. That's short. Stay below, stay short. Right here, your fingers on the trigger, because you may want to get out of this trade if it crosses the 200 day. It does not. It stays below the 100 day. Boom. Stay in it. Stay in it. Stay in it. Fingers on the trigger. Stay in it. Hold. Look at this. All the way through the entire day. How does that work in my 5 minute? Like the other one. Now I really don't trade this in the 5 minute, but we'll see how this works compared with the other one, you know, that I just learned actually. Okay, so that's a 20, 50, 100, and 200 day. It doesn't work well only because we do not have enough ticks to gather up. When you're on the 1 minute chart, you have enough ticks to gather up, so these actually work out better. And then plus, these are actually set on simple instead of exponential. So there you have it. I mean, you can use the 20 day. You see the 20 day held through the entire day. The 20 day, that's on a 5 minute chart, with the 20 day moving average, simple moving average. Back to the 1 minute. I also combine, another thing that I do is I do combine my RSI. I also use my MACD. I don't have it set up here on this chart. I probably will, but I also use my MACD, and I also use my DMI indicators as well when I day trade. And as you see here, and actually on ADX, if you're using the ADX, Art likes to use when the ADX is pointing all the way up to 40 as a reversal. So up to 40 and it pulls back, and that actually works. We've charted it and watched it, and it works. But I'll show that on another video. So this is what we have. Oh, I'm sorry, lost track already. Look at the RSI. We're already touching overbought conditions, and look, right when we're at the 100 day. So this could confirm your position to stay. See how that bounces around, stays above the RSI, stays below, goes to oversold, but it still does not break your 200 day, and your 100 day is still within range. Now at this point, it actually had momentum. It had enough to get above the 200 day moving average, but it stayed below. So notice how that works out. Now with Facebook, let's see how this works out with Facebook. Alright, Facebook, today on a daily, $200 day, remember, 100 day. See how it works out. Started above. Now we're touching. Here, you get a little nervous because your 100 day is above your 200 day, which is great. I mean, you want to see all of your moving averages above the 200 day. That's a good sign. But now you want to wait for the right setup. So we still have our level in here that we dropped. That was the low of that morning right here. Let me zoom in a little bit more. Okay, so we still have our level here that we charted. That's your low point. Of course, you want that to stay in there. So we are above the 20 day. We are above the 50 day, touching on the 100 day. How would you trade that? You can trade this two different ways. You can either A, wait for a better setup, or B, wait for the 200 day, or C, do nothing at all. Just wait to see how it plays out. And you can do that. Wait to see how it plays out. But actually, with this touch here of the 100 day, would be a nice trade long to one of your moving averages. You can either use the 20 day, or you can use your 50 day as your out. So I mean, you can actually day trade these really quick within, I mean, this is 1, 2, 3, 4, 5 minutes. You got a touch here at 418, you're out here at 436, you're 15 cents, maybe 18-cent trade. So I mean, again, just depending on what position you had, you can either make money or not, but you can actually not do anything at all. So not doing anything at all and waiting on our 200 day, still not confirmed here, as we're ranged. We are ranging. There's no indication here. Now we have our 200 day. You could trade this 4608 as a double touch here and here. 4608. Remember, our moving averages are actually going below the 100 day. Again, you do not want to see that. You want to see these moving averages one on top of the other in order of importance. 20 day needs to be above the 50 day. 50 day needs to be above the 100 day. The 100 day needs to be above the 200 day, and vice versa. If in the reverse, if you're looking at a bearish position, bullish position, of course you want these to be in order. Bearish positions, and of course you want them to go in descending order. Boom, boom. You can use that as your out, but you're crossing. Their moving averages are crossing, so something could be cooking up here. 11:30, 12 o'clock hour. We're below the 200 day. At that point, you got your cross of your moving averages. You can short. You can actually place a trade short. And if you did, then of course you use your moving averages as your out. And right here we have the 100 day, which is in position. And this is the setup that we like to see. How do you know when to get out? This can be one indication. Or if you're thinking of using that as your out because of where the dip is, you can say, okay, let's see if it will retrace back to that area, and if it does, I'll get out at a lower point. Or I'll use the yellow open line. That's the open line. I'll use the yellow open line as my out too. So you can say that those would be my two stop points. Here you could have traded and got out. Here the 20-day moving average, that's your out. Again, that's your out. That's when it's actually breaking above the open price. So that's your out. Now this is when the trade gets interesting, because now we actually could have taken a bullish position here, but we were actually worried about our puts position. So we exited out our puts position. Now we're trending on the 200 day as the ceiling now. So let's see how this works out. Breaks below. Now remember, we still have our level here that we made that morning. $200 day does not want to stay above the 200 day. Your moving averages are catching up. Your 20 day has caught up. Your 50 day has caught up. Your 100 day is still below the 200 day, but now is acting as another level of support along with your level that you made this morning. So we broke the level, but a huge spike up. Not sure what the volume was. I actually used volume 2, but I don't have the volume indicator in there. And I probably won't put it in. Let's see. No, I won't put it in right now. Now, at this point, you say, okay, we recovered. Look at the 100 day. It's crossing. We got a dip here. You stay patient. You stay patient. You stay patient. We know this level here is a good level. We know that from here. We know that all over the chart. So now, the moment of truth. This area held 1, 2, 3, 4, 5 minutes straight. It held. Your 20-day fell below, of course, but your 100-day is still above your 200-day moving average. Remember, we want these to line up. This is one thing that's lining up. This here is holding. We're trying to get above. We did not retest, but here could have been a good buy area until we break this level here. Now if we broke that level, then of course you can sell your position, but we've held this position. I mean, we've held this level almost all day, almost all day. I mean, we broke below, we came back above it, came back above this level strong. So this is a really nice level, and especially in between here. So let's see how it plays out during the rest of the trading day. So remember, I said here, when we got a breakout, the 20-day holding it and slingshotting it up. There's your 200-day still there. The 100-day did not cross below, and now you're setting up for your fan. But at this point, your gains are tremendous. At this point, you have huge gains from your buy level here, 46.05, to your dip here, your 50-day still holding, to where it ended at 47.59. So that's how I use my moving averages. That's the difference in between the 20-day, 50-day, 100-day, and 200-day. You can use these simultaneously to actually get a nice, good picture. And actually, you can actually add these moving averages onto this chart, but you just have to make sure you color them in a way that you can notice them. So what you could do is, keep the same colors, just add the moving averages in. So this would be your 6, this would be your 14, and this would be your 20. So because we were using this and this as our floors and ceilings, so you can add these in there as the same colors. So then you'll just have 2 yellow lines, 2 green lines, 2 blue lines, or 2 red lines, just depending on where you put that 26. If you put the 26 here, or you put the 26 there. So there you have it. Let's see how, I already know how these moving averages work. This is the new one that I'm working on. So over a couple of trading days, see how this works. And I hope it works out for you, and I hope definitely hope it works out for me. So just a tutorial to see how it works. Let me know what you think. Thank you.